Hi, this is Abhijit. Welcome to my channel. Today we'll discuss about the funding rate. People who are trading with crypto future probably they have heard this term funding rate. So we'll discuss elaborately what is funding rate and how it has been derived, and you can find some good strategy. On that basis, you can derive some what is the price action and how you can trade. So the funding rate is actually it's coming before coming to the funding rate. I can say you better know two things. One is the spot price, one is the future price. So as it is evident in any national stock exchange, Nifty or anywhere you can play, you can see the future. So future is some speculative measure. Sometimes it is basically held for the hedging purpose, but nowadays it is now a speculative purpose. So the people who are thinking, suppose some spot crypto, say Bitcoin. So they are thinking the Bitcoin will be go up. So they are buying heavily on the future side. So the future and the spot will be there. So there will be a difference between the future price and the spot price. So ideally, in a theoretical terms, the future price and the spot price should be the same. But in reality, you may see that it is not the same. Sometimes future price is higher and the spot price is the lower, and sometimes vice versa. So we can deduce the spot funding rate from that only. So you can see the funding rate minus negative and positive also. So how can it be decided? Say, for example, uh, suppose Bitcoin something, for example, it's a hypothetical case, some crypto coin A that has a spot price around 100 rupees. Now its future price is 90 rupees. So the funding rate is decided upon how far or how near is future rate from the spot price. So now for the example, the spot price of this particular crypto A is 100 and future price is 90. So the funding rate will be decided on the basis of future price minus the spot price. There is a calculation is there, so I can just tell you in the as a layman's term how can you decide in which direction the crypto is working. So suppose, so that means the spot is 100, future is 90, future minus spot is 90 minus 100, that is minus 10. That means whenever you have seen a negative funding rate, that means in that case the underlying spot crypto price is higher than the that corresponding future price. Correct. So it is actually a bullish sign. And vice versa, when you can see, suppose the future price is 100 and spot price is 90, in that case the funding rate would be future price minus spot price. That means 100 minus 90, positive 10. That means future price is higher than the spot price. So it is actually a signal of a bearish term. But whatever you can see and what is theoretical, it may not be true all the time. So what actually happened in the funding rate? So it depends upon exchange. So CoinDX, Binance, many exchange has a different type of funding rate and funding time. So most of the time, basically 2 to 3 hours time frame, it will happen funding rate every 2 or 3 hours. So suppose then how it this funding happens. So suppose 8:30 is the funding time, correct? Now you can see a positive funding rate. I will explain in details in by showing in the screen sharing where you can see the screen and understand. So I just give you a overview. Suppose a funding rate is a positive, correct? Now in that means future is higher than the spot, correct? So 8:30 is the funding rate. So suppose in that future you have first you have considered you have long. That means you have bought this future, correct? So you have bought the future, the spot price is less, and so funding is positive. That means in the 8:30 some money will be deducted from your account, trading account, if you bought the future. But on the contrary, if you short the future, in that case in 8:30 you will get some money from the exchange. Well, actually not exchange, from the long who have done the long side. So that it will be, it is a mechanism to make the price, future price, aligned to the spot price. So because in crypto it's a perpetual future trading, there is no expiry, so these things comes in the picture. In our in a Nifty or BSC there is some expiry date, so in the expiry date it will be, you can manage it, but here it will not like that, so it will be never expired. kind of thing. So this is the fundamental thing. When you can see a positive funding rate, that time if you short that place, you will get some money. And when it is a negative funding rate, you will long or buy some future, you will get some money in the funding rate. So funding rate varies at the multiple. It depends upon, suppose 2 hours 3 hours range is there. So basically funding rate 0.005 or like that, it's okay, you can see this. But the cautionary point is when you can see funding rate 1% or -2%, because I have seen where -2% or 3%. In that case, you should be very, very cautious, because in that case, if you are not very cautious and you have in a trade, and if you are not in a wrong side of the trade within the funding rate, when the funding happens, a lot of money will be deducted from your trading account, and that is not a desired. Correct. So I will explain by showing some example. So let's stay tuned in the mm, video. You will get the other insight and examples from the real time. Okay. So let's see with an example how it works. We will take a ripple. Let's see XRP. See, in future you can see it's at 2.2964, and in spot you can see USDT is 2.2975. You can see the spot is higher than the future, so obviously this is a future minus spot will be the negative, and you can see the funding rate will be the negative. Correct. So the next funding will happen around after 2 hours 43 minutes and 56 seconds and like that. So in that time, suppose in this case, if you have bought some future of Ripple, you will get some money from around after 2 hours 43 minutes. In that case, if the funding rate will be still is minus. Now take an example for the some positive funding rate. This is negative funding rate, correct? So consider some meme coin like Mooding. Okay, this is trending now. See, in the Mooding, in future you can see it's at 0.23634 and it's fluctuating, and spot you can see 0.2363. Correct. So obviously future is a little bit higher. It's a 630. It's sometimes it's a higher 634 or something. So it should be future minus spot. It is a little bit positive. So it should be the positive. Let's see what's the stat. See, this is a positive. So around 2 hours 42 minutes after funding rate, what happened? If you short this moving, you will get some money because its future is higher, so it will have to give back to the shorter. So this is the basic things you can see by this. Now, how can you deduce some strategy? Suppose this is a funding rate 0.005% or 0.00123%. It's acceptable. Okay, there is no issue for that. Suppose for BTC, you can see it's a huge. But if you can see the funding rate like 2%, -2%, -1%, then be very, very careful. The reason I'm telling -2% means it's a very, very bullish. That means the future price is way, way behind than the spot price. So the only option to be two price will be same is either the spot price will be go up and the future price is going much much higher than the spot price. So that's the ideal situation. But I have seen many times it will be a opposite also. Sometimes spot price also go down heavily, and also the future price will be go down. So it is not necessarily theoretically that if the minus funding rate means bullish and the positive funding rate plus one or plus two, it's a super bearish. It's not like that. You have to be very, very careful when you are trading it, because if some minus trading, recently what I have observed in Solar, this thing I have show you one trade that is a very, very dangerously if you go in that way. You can see -0.01, but it has been gone through in a very, very bad. I can show the chart. If you daily chart, see this chart, in that case the funding rate that time it will be -2%. So in that case ideally it should go up. The future is much much heated up than the spot price. Correct. So, sorry, spot price is higher than the future price, so it should be go up, but what happened, it will be go down heavily. So both the way the prices will be aligned in the same line. You have to be very careful seeing the price action. But whenever the -2% or 1% happen, you have to take a very quick bet. Suppose it's a -2%. That means, and this case, consider this case. Now it is the price is going down. In that case, -2 means you have to long it, correct, so that you will get money in the funding time. -2%, suppose you have spent around 10,000, you will get around 6 7,000 just by funding. So the funding rate is like 2 hours. So when the see, this is a funding rate 40 minutes. So before the 1 minute you have taken a trade around 10,000, and within that you can take it. The thing is that suppose it's a theoretically proper, suppose -2 is funding rate and it is bullish, that means the price, the future price is going up. In that case, if you have long it, if that means if you have bought the future at the just 1 minute before the funding rate, you will get suppose 5 6,000 money. Along with it will be go up and you get some money. But if it is going down, and in that time if you are long it in the funding rate, it will be very very risky. You should be double careful when you are doing this strategy. So my suggestion, don't venture with that thing. Only thing, theoretically, when the minus funding rate and the future is bullish, that time you can long it. That means buy it at the 1 minute before of the funding rate. Suppose 8:30 is the funding time, so better you can do 8:29:32. That time you bought it. If it's the funding rate minus, you will get it the money, and after the money you get it, you just close the position. So within 1 minute you get some money if you really want to do it. But you should be going out, because if you don't have any other strategy by seeing the candlestick or nothing, it is always advisable to close the position as soon as possible, because your capital should be protected first. So this is a small strategy which you can use to take money without going through any technical details analysis. But you have to find out the funding rate of like 1% or 2%. But my suggestion, even if you see the funding rate, you see the this volume, because minimum 100 million or billion is the best. So it will be liquidity will be high, you will be get out immediately. If it is less, then a lot of slippage will happen and your money will be gone. Even if you get some money because of the funding rate, after that one wide spike, your funding rate along with the other money will be gone out. So be very careful and see the funding rate. And one more thing, suppose you have long it. So my suggestion, always check when you have taken a trade. After that, you have to check what is the funding rate and what is the time pending for the next funding rate. So on that basis, you can plan your trade. Suppose it's a positive, that means the crypto may have a chance to go down. Correct, but it's very very minute, like this one, 0.001. So it will not very much impactful. But it's a 2%, 1%, 3%, 1.1%. Then be careful. You can use those things. That is a cue to understand which direction price will go. But be careful before the funding rate happens. If you are not very confident about the technical analysis on those things, close the position. And after that, you can see, because once the funding rate completes, there is a plethora of changes happens in the price that I have observed. Correct. So in that way, you can use this funding rate and get some quick money. And I think this is the basic idea about the funding rate. So you will have any questions, you can share with your comments, and don't forget to subscribe my channel. Thanks for watching this.